Markets got two curveballs on Friday from the new Fed chair nominee and hotter than expected producer inflation. This led markets to slip on Friday, but not enough to erase all the gains from earlier in the week. Here's a quick recap. Monday kicked things off on a positive note. Markets moved higher on optimism heading into the first Fed meeting of the year and anticipation around big tech earnings. That momentum carried into Tuesday, even as the White House raised tariffs in select areas and consumer confidence came in weaker than expected. Wednesday, though, marked a turning point. The Fed held rates steady and clearly signaled a pause on further cuts for now. Then after the close, big tech earnings were mixed. That weighed heavily on markets Thursday, but they did claw back most of the losses by the end of the session as investors hoped to continue the market's melt up. Then came Friday. First, the White House announced Kevin Warsh as its nominee for the next Fed chair. Warsh historically has been viewed as more of a hawk on inflation, which immediately added uncertainty around the future of policy. Second, delayed December PPI data came in hotter than expected. Producer inflation is now running around 3.5% year over year, while consumer inflation sits closer to 2.8%. That gap suggests higher costs may not yet have flowed through to consumers, with companies absorbing some of the pressure for now. Taken together, the Fed chair nomination and producer inflation, that kept investors cautious, pushing markets lower into the close. So what now? Well, attention shifts to the other side of the Fed's equation, the labor market. Next week is jobs week, with labor data rolling in throughout the week, but culminating on Friday's jobs report. We'll have more updates throughout the week. Stay tuned.